when everyone's come in, post-election, everyone's all excited. We're getting these like big juiced gains. The Fed is likely going to be cutting rates this week on Wednesday. I think it's going to be a bit of a neutral to hawkish cut, just because we do have core PCE this week as well. And it doesn't show a forecast here on the Bloomberg economic calendar, but I want to say that we had CPI print hotter and inflation is warming up. But I saw the numbers this week. The core PCE year over year, which doesn't have a forecast, but we had a previous at 2.8. I read this weekend that we're looking at a Fed projection of 2.89. So this is either like the Atlanta Fed or the Philly Fed or the New York Fed or whatever. But 2.89 is the projected year over year. Again, showing that this is the Fed. And again, I don't think the Fed is this dumb. But the Fed is like, okay, we're going to cut rates down to 4.25%. Okay? So they cut to 4.25 and they look at core PC and they're like, well, PC is at 2.89. We still got lots of room to be, less than restrictive. I don't think they're that stupid, because if they're seeing that inflation is now 3 prints going up, we bottomed out on CPI, we bottomed out on PPI, if we're bottoming out here on PCE and core PCE, and they're trending now with multiple data points trending higher. This is why I think it's going to be more of a neutral to hawkish cut this week. Now, does that top the market? Not necessarily. They might say very little to disrupt the trend. We might see another 58th, 59th, or 60th all-time high going into Christmas and New Year's when the market is just in permanent holiday drift mode. The Santa rally. Also from Christmas, like that week of Christmas and the New Year's, that's considered the 2-week Santa rally. Performance-wise, that's usually up like 1% to 2%. So we could still get higher highs by the end of the year, which if that's the case, that's fine. I am still taking some hedges and stabs at hedges with SPY and the QQQ. So in the Pulver alert section, I'm going to add this in right now. I put in a trade on QQQ. And we don't necessarily have a huge bar count because we did hit the 200 moving average during that August 5th bottom. So that July top, August bottom. But the NASDAQ is the one index that is now like the front runner of performers because the S&P hasn't made a new high since, this almost is going on 2 weeks now. So we haven't made a high since December 6th. So that is 10 calendar days ago. The NASDAQ continues to make 3 all-time highs the last 4 trading days. And I would say 1, 2, 3, 4 out of the last 6. So 4 out of the last 6 days on the NASDAQ, we made new all-time highs. We are getting a bit stretched away from even the more aggressive 21 moving average. But I'm always looking at the measurement away from the 200. So that's a little off. Let me go here. We're about a 12% extended move. Which again isn't necessarily like, oh my gosh, we need to crash. That's not what I'm saying. But when we came up into this bar count, plus we had this move, we were around 15%. So could I see us going a little bit higher? Yeah, a little bit higher. Maybe into this 15% extension. So if we're 15% above the 200 moving average, like we were back in July, I could see the market pausing there. And the one thing that price action has to do is tell us. And if price isn't turning over, if price isn't putting in some type of really, obvious red flag candle where it's like some massive daily or weekly candle to kind of shock price for a moment, then it might not happen. But at some point when this happens, this is when all the hedge prices start to go higher, right? Like right now, it's very cheap to hedge, and I'm okay hedging. So point is, I'm taking a stab at this one. I'm doing a 131 expiration, and I bought a 533. So 533 buy put and a 510 sell put, and I paid 585 debit for that trade. So that's what I'm putting in the Pulver alerts. Essentially, it's this. I'm paying $585 for the trade for an upside of $23. Okay. So if I take $23 out of this trade, let's say we go back down to 510, I get $23 credit minus the 585. I get $17.50 per contract if I'm in 100 shares. That's a $1,700 profit for something that cost me less than $6. So that's about what I'm looking at for the SPY, the QQQ, something that's going to pay 3 to 1, 2.5 to 1, 4 to 1, 5 to 1. What pays even more is like way out of the money, long puts. But they also are like a waste of money because price has to move very fast, very aggressively. We almost have to have like just like a giant like delta gamma squeeze, and that can happen. But that's like the trade that you put on that you pay 10 cents for a long put and it pays you $1 credit. So you get like a 9x profit, which is awesome, but that's also few and far between because your probability is extremely low. You're talking about maybe like a 1 to 3% chance of that trade paying you. I would be doubtful that we see 10% more upside on the SPY before we see like a 3, 5, 7% or even a 10% downside. Okay, so if I'll do it. I'll mark it right now and just make a note. We'll have some fun talking about this. But right now we're at 606. Okay, so what's 10% higher? It's going to be way up there, right? 10% higher gets us up to around 667. 667, 10% gain from December 16. So let me make a note. Horizontal ray, 667. Right in that area. So I'll drag this up here and it's out of the way and nobody's paying attention to it. But I doubt we're getting there before we have some type of pullback into the moving averages. So a 50 EMA, 100 EMA, something in that ballpark to at least get some buyers interested. And how does it happen? I have no idea. Right? But could the market find a way to hit all-time highs by the end of the year? Sure. Fed doesn't say anything to disrupt the market. Fed, they can say whatever they want. They can keep their mouth shut and say nothing about inflation, and it gives the market nothing to the Q&A for Jerome Powell, and he could ignore everything. He could go and push like a play button on a tape recorder and give nobody anything. But the Fed's going to cut. It's 95, 96% priced in. Probability is really high. We still have PCE on Friday. Obviously, I'm curious what that is, but we had muted reaction from CPI, right? CPI was higher, but the market was already at a low, and it ripped up like $7 or $8 on the SPY that next day. PPI was another warming up inflation, going lower. But the argument is like, well, based on CPI and PPI, what's actually extracted for that to make the core PCE is not as really bad as everyone thinks. Well, if our core PCE number is at 2.8 and it comes in 2.9, that's still freaking higher, So inflation's going the wrong direction. It's pretty simple to see. So a cut going into the end of the year looks like we're going to have a pause or have some type of reality in 2025. The market's already adjusted this too. The market was expecting, another 100 basis points in cuts for 2025. I think the market's going to get lucky to see maybe 25 to 50 basis points in cuts for 2025. And the way it's lining up in the Fed Watch tool would be a potential March and July would be the two cuts. So if we make a cut here, so we cut December, pause, cut in March, pause, cut in July, and then we see what that gets us. So if we can get through the first half of the year kind of unscathed, I would think the second half of the year is going to be a bit more difficult and challenging because then the cuts are done, And if something breaks, sure, the Fed can cut more, and that's always in their toolkit. Like, oh my gosh, we need to fix something. We need to put a backstop in. This has been the one time that I can remember in my career that the Fed hasn't had to break something in order to enact their policy. They've been really lucky, and inflation hasn't broke the market, hasn't broken the U.S. economy. We're certainly getting this bifurcated market where it feels like Main Street is still feeling the higher highs in inflation and this just persistence in inflation, and then Wall Street's just celebrating all-time highs like nothing could go wrong. So, if Main Street feels more of it, there's either layoffs. So one thing you want to watch for is, let me see here, residential construction job numbers. if I can get a data point here, I'm going to try to find this in the, I don't know if the Fed has this on their website, but residential construction job numbers, if they start to go down, that's usually another undefeated recession indicator, and they have topped out. They are starting to decrease. So residential construction job numbers are trending lower over the last three months. You know, does it get worse? I don't know, but something else is on my radar. All right, that's enough of the outlook. Am I talking out of my butt here? Does this make sense? I think we're going to struggle to go double digits to the upside before we see a deeper correction. I would say, like I said, give me like a 5 to 10% downside correction, and I would say that would check the box to say that my projection was right. We'd see some type of correction that's meaningful first before we get any type of ups. And look, if we get a correction first, I'm going to be the first one lined up to say, okay, I'm ready to buy more, and then I'll be targeting something like that as an upside target. But if we just keep going and going and going and going, I don't think we get here before we have some type of hiccup. Okay, so just my thoughts. All right, let's go top down here. So on the day, S&P's up 0.43%, NASDAQ up nearly 1%. The Qs continue to outperform. We have some interesting add-ins for next year. MicroStrategy's getting added into the QQQ. I would say most people in this room, talk gold, talk Bitcoin, understand where it's going. They've seen the price appreciate like crazy, have some type of appreciation or investment in it. This is going to be interesting to see in 2025, even if you never want Bitcoin, right? If you're Peter Schiff and you never want Bitcoin, but Peter Schiff has investments in the QQQ, you are going to be in Bitcoin, because MicroStrategy getting added in is essentially like having allocation to Bitcoin. So we'll see, but it just makes things interesting. All I said last week when I read that was this is going to make the Qs more volatile. If we see a 40, 50, 60% correction of Bitcoin, which, usually traders have been experiencing 60 to 80% pullbacks in Bitcoin, we'll see what happens. But I would say your new benchmarks going into 2025 is going to be the price of the S&P, the price of the NASDAQ, the price of Bitcoin. That becomes like these really interesting benchmarks to say, how's my portfolio doing based on these three things? And also, that could be a really easy way. If you want to throw in gold, that's a pretty good portfolio if you think about it. If you did 25% SPY, Qs, GLD, and IBIT, I mean, it's an aggressive portfolio because you're fully invested, but you can trade options in all of those. You could protect your portfolio with option trades. I mean, as far as simplicity goes, that's a pretty powerful combo there. So I don't know, kicking that around for some simplicity moving forward. All right, Russell's been underperforming. We're still up on the day, 0.82%. The Dow's come back briefly, but Dow's pulling back into some decent EMA levels. IWM has pulled back towards the 50. This is another one that I'm still pseudo interested in. I don't think I'm good at the 50, but if we came back down to the 100, I'd probably start looking maybe another upside push to see if the Russell can get up there.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.